All right, to show you guys proof, you could see here the balance for this 50K challenge is currently at 2,000, and this updates at market close, right? 2,000 right there. And you can see today I'm up $1,000 trading ES. So when the market closes, it's going to add on to my current balance, and this account is going to be passed. And I'm going to open the Express account. So I'll show you guys my stats really briefly. My best day, $1,000. Worst day, less than $500. Average winning day, almost double, or actually over double my average losing day. And let's go down, show you guys the individual stats. So my average winning trade is 681. You can see here, average losing trade 152, which is a very good R multiple. And then the winning trade percentage is 50%. Obviously, after today's trade, the winning percentage is going to go up. The average winning trade is going to go up because it's $1,000 profit, and it was one winning trade. So this is going to look even better in terms of these stats. But these are the stats here, and I took, let's see how many trades. Oh, you could just add this up here. 1, 2. Well, these are days. I'm not sure how many trades I took, but you can see it was a good batch of trades for over a month. So, and I'll just refresh it one more time so you guys can see it's completely authentic. And yeah, I'll get into my trading breakdown of how I was able to do this. Alright, I'm going to show you guys today how I was able to catch the lower day on ES before this massive move up. So before I get into it, if you guys want more trade breakdowns, comment any questions, anything. I'm open to answering any questions you guys have. And as always, I'm going to start with my pre-market game plan, which I post every day before market open. So let's get into it here. So pre-market, this was the context. So let me just make this bigger. Yesterday, ES was gapping down from this 5206 to 15, leaving this 11-point gap to the upside, which you could see here. You can see the market was opening at this 5192, leaving a gap. Yesterday had more of a range-bound day, and the main thing that I noted here was despite S&P 500 breaking yesterday's low, the VIX is nowhere near yesterday's high. So I've been watching the S&P and the VIX for years now and how they behave, and it's actually really good if you monitor both of them for certain discrepancies and divergences, which could give you a little edge on the market. So to break down what I saw, which was a lot of this thesis, honestly, first let's get into the S&P 30-minute chart. So you could see here, I'm going to plot out the low a day on the S&P. So this doesn't always work like this, but the general rule of thumb is when the S&P moves higher, VIX futures should move lower, vice versa. If S&P is moving lower, VIX should move higher. So what you'll see here is, this is Wednesday, right? We broke underneath yesterday's low. So the S&P made new lows. This is what I mean by a divergence here. So you can see new lows getting put in on the S&P 500. And if we go to VIX futures, technically, not always, but VIX futures should be making new highs. But look how weak the VIX futures is. You can see this is the same swing high I showed on the S&P. VIX was putting in a lower high. So if the S&P is breaking underneath a low like this, the VIX futures should be at or near the high. It doesn't have to break above the high. Ideally, for the shorts, you want to see it break above the high, but at least near it. And look, this is a weird discrepancy. VIX is nowhere near, my bad, I'm out of breath for some reason. The VIX is nowhere near yesterday's high. So for me, when I see something like that, it hints to me that the down move will be short-lived, aka that it could be a false move. So this VIX futures ES discrepancy is one piece of the puzzle, and then the other piece of the puzzle I showed you guys before, which was the let me just pull this up. The other piece of the puzzle was the gap down. So we have a gap down, that's one piece. It's a 5206, and then the discrepancy telling me this down move will be short-lived. The final piece of the puzzle comes intraday from the tape. So scenario number 3, the VIX may be hinting that this down move will be short-lived. The market always leaves traces and hints, and it's our job to pick them up and come up with a good trading thesis, which is what I did today. So we have to pay more attention to the poor structure to the upside, as it has a higher probability of getting repaired. In simple terms, when we're in an uptrend, gaps to the upside or areas of low volume to the upside have a higher probability of getting filled compared to areas of low volume or gaps to the downside. You can see we have several gaps here to the downside. Gap here, and if you look at the volume profile, there's what I consider poor structure, which usually gets cleaned up, which means we likely trade back into this area. All of that is a weaker structure, but it's less significant because the market's clearly been putting in higher lows and higher highs. So that's why I put way more emphasis on this gap. So let me just get into the real-time commentary. Let's go to 9:30. All right. So at 9:30 in pre-market, what I saw here on the tape was I saw very unusual activity. So you could see at 9:03 there was a large bid, which got filled. 9:1, 8 ticks below, exactly the same size. And then 8 ticks below again, so another 2 points. So the same exact price increment between all these bids and the same exact size at this low at day. Now, the way I use the tape is I like to spot things out of the ordinary or unusual. This to me, it's unusual to say the least. So I read this as a potential buyer looking to leverage into a position in the market. And that ended up being true. We don't know what it's going to be until after the fact, but with hindsight, you could see that this analysis was, in fact, the case. So you could see that here. And I posted an update again with the VIX futures. S&P broke the low. Look, VIX nowhere near the high, side by side. So I said as long as ES could remain bid above this 9.3, I want to be a buyer in the S&P 500 targeting 06. Again, 9.3 is where I got this level from the tape. So fast forward, you guys are going to see how well that level got respected intraday. And I caught this pullback right here before this massive moves upside. So 9.34, you could see I said at 9.31, as long as we can remain bid above this 9.3, I want to play it long. 9.35, so 4 minutes later, you could see we pull right back into 5193 to low a day, and then this bid holds, market moves higher. I tried to get filled here, but my trading was locked, which was unfortunate because I would have got a really good entry, but I still liked what I saw. And then we got a dip above 9.3, which moved up, and immediately right there I tried some long, 9.36. So I said I'm trying some long. I like how this 9.3 held. Stop is under this low. Speculating 9.3's defending price, and I'm targeting 5206. So you could see this was 9.35. This is 9.3 level holding. Missed the entry, pulled back, held, got long. I was risking, so I got long here. My stop was under that low, that little swing low. So let's see. Let me just load it up. I was only risking 3 points, right? Because my entry was 9.550. My stop was 9.250, which is a tick under this low. So I was risking 3 points to make 10. So really good risk to reward, 3.5 R. Again, risking 3 points to make 10. That's the most important part of this whole setup. And then off that analysis, it became pretty simple after that. Tried some longs down here. Stop was under here. And you can see the massive move up stop never got hit. Kept updating the Discord as it started to move in my favor, as I was managing my risk, but it was pretty stress-free. So once it got 7 to 10 points in my direction with this lower volatility, my stop became entry, and I wasn't going to sell until my target hit or my stop loss trigger. So you could see at 0250s, and you could see as the market moves up, there's super strong buying coming into the market, confirming my analysis. That's exactly what I wanted to see. Look, we're up 7 to 10 points. My stop became entry. and I was holding into the target, and I said it's not going to move straight up, just got to follow the plan. And let's see a nice push up into 5206. This was in real time my limit orders that I had set. You can see I had a buy stop at my entry and limit at my target, and I got all out at this 5206, which was that gap right here. And I caught a nice chunk of this move. I can't ask for anything more. Yes, the market kept moving up, but I got my chunk. I'm not trying to catch the whole move. But the main thing of this trade that I'm proud of is the risk to reward, right? It was just such a nice entry. I was only risking 3 points to make 10. So that's the best thing. And I hope you guys could learn. I'll show you guys how I came up with the level, how I came up with my analysis, what confirmed the trade for me, and that's how I was able to capitalize. Just one trade today, netting $1,000 profit on the S&P, and I was only in this trade for like 25 minutes.